Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. Today is Tuesday, November the 23rd, 2010, and like we do every night, it's time to look at the markets, so check it out. Okay, I believe I have to make an adjustment to my Dow Jones Industrial Average chart. I believe I've made a mistake here. First off, whenever we're looking at the Hang Seng, we're looking at that a while back. Let me go ahead and show it to you. Okay, here we have the Hang Seng Index, and you'll notice back here we had a nice run up here. We called this peak very easily because we had that confirmation from the shooting star signal right there, and down she's gone. We expect this to keep going lower as the news out of about North and South Korea came out. That's going to further drive markets lower. And this candlestick formation is not a hammer formation. Whenever you're getting a bottom, you start looking for this kind of a signal here. But again, this one's also showing that a low point here on the slow stotch and a lower low here should be going lower. Price activity should be going lower. So the fact that you currently still have equal or slightly higher trend line here is wrong. It should be actually pointing lower. So you're going to see more downside here in the Hang Seng. But my main point here to draw this out is that we were able to call the peak here because we had confirmation right there. Okay, on the FTSE, we got a nice move to the downside here. Expect that to keep going. Again, no hammer formation. We were able to call this one the reversal on this one as well because of the shooting star formation, but more importantly, low point here, lower low here, showing a bearish setup. You look for that bounce to the upside above the 80 line, and that's where you'll be looking for the short point. So to have a run up here and then get the above 80 line and then have that shooting star, everything would make sense to be that would be the shorting point, the peak right there. So what we have here is the FTSE is peaking and the Hang Seng is peaking. So why is it for the past couple of days I've been looking for a bounce in the markets as though they hadn't been peaking in the US markets? Let me show you what I did. Okay, we're looking at the Dow Jones Industrial Average. We've seen this sell-off here, but you'll notice no shooting star formation anywhere at the top, right? It actually sold off substantially for a while, like about a week, and then it formed one. Now, it can be considered a late one, but those are rare to show up like that. Typically, you'll get them at the peak, so this one was kind of tricky to spot. But the thing that actually threw me, the thing that I actually made a mistake on here was the fact that we had a low point here and a lower low here, trending down, all right? So we called this a bear setup, and the corresponding low points here and here, okay? And then from that point, we were saying, okay, look for a bounce to take the slow stotch back up to the 80 line where you'll get the shooting star formation that happened where I thought was missing right here, and then you would get that and you'd be able to short. I don't believe that's going to happen, and I know it's not going to happen because of what the market's doing. First off, yesterday we had the hanging man candlestick formation here, and you'll notice it's all finding resistance at the middle Bollinger Band line. That doesn't happen unless you've shifted gears, and so that's concerning to me. And also, like I said, we had this sell-off yesterday. It did pull it back up, but it did raise a red flag with me that something wasn't quite copacetic. And then today we had to pull back to a lower low, low point of yesterday versus today, and we closed down. So this confirms that in fact we are rolling over right here. We should not expect a move back up here to the slow slash above the 80 line before we start shorting. Now, like I've said, I've already been short here. It's not like I'm missing anything, but if there's anybody out there that's waiting for that bounce to above the 80 line before they short, you could in fact see a sell-off all of this before you ever saw a bounce like that. I'll talk about that in a minute, but the main thing I want to do is just point out that I made this mistake, and I know I have because the market is now rolling over. So I went back to this chart and said, where did I mess up? So let me show you where I messed up. So this is what I should have done. Low point here, lower low here. This is right here, downtrend. Corresponding time frame right here, right here. That's your bear setup. You should wait for the bounce above the 80 line, calling that the peak where you would short it. Okay. You also notice a higher point here than here. This is trending down while price activity is trending up. This would be a bear setup, a bear divergence, and you want to be shorting this. The only reason why I didn't spot it immediately is because there was no shooting star formation at the top to confirm it. It actually formed late down here in the pattern, and therefore I missed it. So my main point to bring up here is that if you're not short, you need to be doing that. I would say do that now. Okay, there's my red arrow saying that's where I would be shorting at right there. So that makes sense to me now. At the same time, we also know it's accurate because it confirms the long-term chart, which is telling you should be shorting now as well. So it's just one little glitch that I did there that you need to make sure that you don't fall for that. And the easy way to spot whenever you've made a mistake is that the chart will begin to do something you did not anticipate. As soon as that happens, it means something's not right. You have to go in there and figure out what it is. So that's how we do that. A couple of more points to note here. I got the right tools. All right. You do have more gaps down here that you're going to have to fill. All right, these are low volume gaps below us that have to fill. Those are short-term gaps that end up getting filled short-term. And then we have some gaps up here, and a lot of people are asking us, what about these gaps here? Well, these gaps here are actually based on higher volume, so it's different there. You don't have the same type of gap. And even if you had the exact same type of gap here, you would not be able to trade based on a gap alone. Just because you've got gaps below you or gaps above you is no reason to trade. It's just something you have to take into account. So I want to keep that in mind. And also, if you're just going to look at it from a mathematical standpoint, say I've got 2 gaps above me that could fill, I've got 4 below me that could fill, you'd always bet on the larger number. Okay, so that's something else to point out here. I've also heard a lot of people asking why we're not seeing a lot of volume. First off, you are. You just don't have to get it every single day that the market's down. You don't have to have substantial volume behind it. And again, the volume is actually more important on the upside as opposed to the downside. That's just a little tidbit of information for you to remember. But you have had substantial selling going on for a while. You should know that it's been in play there for a bit. That's smart money bailing here. So the fact that they're selling at this level and above, okay, you can see this sell activity here is very strong, and as well as here, okay, at that level. And the fact that you're coming back down, rolling back over here is not you don't have to have strong volume every single day, but it is in fact there. Okay, quick look here at the gold chart. Someone asked me if there is going to be a head and shoulders formation here on this chart. It is starting to look that way. We haven't got it finished yet. It won't be confirmed until it breaks the neckline. Let me show what that is. Basically, you've got the first shoulder or the left shoulder. Okay, note the low point there. The start of the head formation. All right, rolls back over, low point there, and start of the right shoulder. This low point here and this low point here are the trend lines you'll be drawing on that trend line on. All right, and that would be your neckline. Price activity would actually have to roll over at some point, not make it a new high. It cannot break up out of that and still be a head and shoulders pattern. So it's going to have to roll over at some point and then come down here and close below this neckline in order for that to be a head and shoulders pattern. If that is the case, you can measure the distance from here to here and apply that to the breakout point, and that'll be how far you expect price activity to go. You're looking at, if for example this were to break down right here, you'd be looking at like 1250, something like that, which would be about previous resistance would be new support, so that would make sense as well. Just keep an eye on it. It's not a bullish sign in any way, shape, or form. Okay, quick look here at TSX. Got to stick a fork in this guy. We got a shooting star formation today, right there, and that's going to be a major sell sign. You'll also notice a lot of different things here. You've got the tools out. Okay, you got the low points. All right, lower low. All right, it's shooting up. Bearish divergence. Look for the bounce to the upside to be the peak. All right, you get the bearish divergence here. This is a bearish setup. Telling you look for that bearish divergence to form. There it was. You sell off. You bounce back up here. Note the series of lower highs and a sell signal in play. The trend is shifting. All right. Also note low points, lower low. Trend is shifting. Okay, from an uptrend to a downtrend. Stick a fork in TSX. In my opinion, Canada's market is toast as well as the rest of the world. Pretty cool. Pretty easy. Be short. Do not be long. Sorry about that mistake. Just wasn't paying attention. Okay, quick look here at oil. Same thing. Bearish setup. Low point here. Okay. You see that the low points were trending down on the slow start, telling you the momentum to the downside was increasing, yet price activity ignored it. And then you got the bounce, which is where you should be looking for the short opportunity. That's where you're going to get above the 80 line. And then you got the shooting star signal right there. Again, the one I happened to miss, I would short right there. Okay, there's your update. Let me grab that tool right there. Okay. If you've not been to our free website at perfectstockalert.com, it's right there. It's 100% free. All we ask in return, please refer a friend. A quick look at our disclaimer. The disclaimer, read it and weep. God bless. Take care. Hope to see you all tomorrow.